When it comes to finance YouTubers, my goal and my current belief is that I am the most transparent currently at the moment. I make videos that document my investment thesis and in current investing mindset as well. Whether I be right or wrong, I've documented my thesis and my thoughts the entire time. And today we have a good one. I'm in a bit of a dilemma with my portfolio, and I'd love to hear your thoughts overall. But before I get to the video, if you appreciate the transparency of this show, it would mean so much if you could hit that subscribe button. Also, if you're already subscribed and you want to go the extra mile, get access to a stock market competition and so many other awesome perks, become a channel member today, link in description. And with all that out of the way, roll the intro.
Hello, I like money.
Alright, so obviously the stock market's been quote-unquote crashing for the last couple weeks, and during a time like this, it is very easy to get discouraged and have a lot of companies in your portfolio that you want to sell out of, or maybe that you've actually been proven wrong on due to your investment thesis or whatever. For me, I personally haven't found there's been a lot of companies like that, but I've had a lot of companies in my portfolio that I've had question marks on recently. So today, in full transparency, I'm going to be sharing the 3 of them. I would love to hear your thoughts and input on them. These are all companies in my portfolio that I'm uncertain of what the future is for them honestly in the portfolio. We're going to be looking at them from a standpoint of the investor, their future, my investment thesis, has it changed, and more. Alright, without further ado, let's jump into the first company, which is UPS, stock ticker UPS. With my UPS position, I'm currently down 11% on it. It's a smaller position in my portfolio with me only owning 2 shares with $311 worth of market value. UPS has not been generously priced by the market over the last couple of months, with it pretty much trading flat and down. I bought it $165 and $170, so I am down on the position right now. And this is just straight up one of those companies that I truthfully do not know what I'm going to be doing with in the future. With one side of the things, I think Amazon could be a threat to them totally, with my other thoughts being that they're a great company, a duopoly with FedEx. I really don't know where I reside here. I would definitely say I'm leaning more towards the side of them being a duopoly with FedEx. With that said, though, it's one of those companies where I'm like iffy if I want to add more, and I'm iffy if I want to sell out of the company in general. I don't think UPS is the greatest company whatsoever. They offer an attractive valuation, I will say that, at a 13.31 PE ratio right now. Personally, in my portfolio right now, I want to be adding really good companies to the portfolio, and I just haven't really dictated whether I think UPS is a really good company. I will give them this, though. They do have an amazing growing dividend and also have rewarded shareholders through that growing dividend and buyback. They're currently trading at a 4.21% dividend yield, which is pretty high for them. Looking at their free cash flow, their free cash flow has been kind of weird too. They've had 2 really impressive years over the last 2 years in 2023 and 2022, but there's questions for me of how they'll be able to sustain that kind of free cash flow per share. They have a 10-year CAGR on that free cash flow of 7.4%, which is pretty solid. UPS was one of those stocks that I bought when I really didn't know much about investing, and I just assumed that UPS and FedEx would continue delivering packages for the next 50 years, which I mean is likely the case, but at the same time, my investing goals and my current mindset when it comes to investing has definitely changed a lot since then. And I really truthfully don't know if UPS will make the cut when it comes to the companies that I want in the portfolio for the future. It's really in that middle part where I don't know if I want to buy more of the stock and get my cost per share down, get a good company that has been rewarding shareholders for a while when it may not be the best company, and there are questions about if Amazon will actually take over, or if I can just sell out at an 11% loss and put the money in something else. Or I could just straight up hold like I've been doing and reinvest my dividends. So with UPS, I really don't know at this moment what I'm going to be doing with them. It's not a crazy position, but $300 could be put to good use in some other companies. And keep in mind, guys, I'm continuing to do research on these companies every single day. Alright, talk about a woozy, we got one here. And this is, of course, the utility that dropped pretty much 20% in 1 week somehow, which is NextEra Energy, stock ticker NEE. NextEra Energy is pretty much known for its clean energy investments and how they're going to be the clean energy company in the future. And as a utility, they're pretty much the growth utility company. NextEra Energy is a very small company in my portfolio, with it being my 3rd smallest holding. NextEra Energy, I'm also down 35% of my position right now. With utility, I really don't expect that, which honestly is crazy. Unfortunately, they're $70 billion in debt right now, and with high interest rates, investors want nothing to do with companies with debt like this. They're pretty much 7 times leverage, which is also incredibly insane. Now, yes, guys, I do understand that this is a utility company, but at the same time, $70 billion is so much money. Hopefully, over the long term, these investments do pay off. So where did I go wrong with NextEra Energy? Again, it was one of those companies that I bought where I really didn't have the same investing mindset as I do right now. I truthfully do not understand much about utilities. Like, I obviously get the basics of how a utility operates and runs. They're basically a legal monopoly. With that said, though, that's where I probably messed up on my investment thesis, and I'm stuck now. I'm heavy in the red on the company. This company has a lot of debt, but at the same time, it's a utility, and it possibly can't go wrong as a long-term investment. Not to mention, they also do have a pretty aggressively growing dividend with pretty much a 10-year growth rate of 10%. The last time NextEra Energy saw a big drop like this, it was at COVID levels. That's crazy. With NextEra Energy, it just financially doesn't look as secure as I'd really want a utility to be. Their debt has also been increasing like crazy. They recently sold off part of their business, basically their natural gas pipeline. I don't know how much I feel about this, but obviously the market didn't react too well, as the stock has sold off pretty much 16% in 2 days. So obviously here are my two dilemmas here. If I were to sell, I'd be selling out at a crazy loss. I'd be losing a lot of money. Or I could buy right now, get my cost per share down on a utility company, which over the long term, it's likely to do well. Nothing is guaranteed, obviously. It's basically a legal monopoly. That's had $70 billion is a lot in debt, and they haven't made any efforts to really reduce that debt as well. So there are a lot of red flags for sure compared to other companies in my portfolio. With that said, though, I'm really against selling out of companies prematurely and missing out on potential long-term gains, but 35% is a lot. Again, I'm consistently and continuing to do research on these companies day by day, brick by brick. With utilities and NextEra Energy, there's just so many moving parts that you need to be aware of as an investor. Basically, they're not really being really balanced when it comes to their dividend growth. Their dividend growth has been really aggressive, especially for utility. I would rather see them take a lot more balanced approach to pay off some of that debt, maybe not paying a crazy aggressive growing dividend like they have in years past, and getting that debt down and managing the company at a healthier rate rather than seeing that crazy growth. That's what I'm hoping to see from NextEra Energy. So right now, there's dilemmas in my head, I'll be honest, guys, and I really hope this transparency is, being appreciated by you guys, because I'm being honest, I'm exposing myself here. Looking at their dividend, though, as I mentioned, it's pretty much been consistently 10% dividend growth rate annually, which I do like to see from my companies. So it's rough, man. I'm going to just continue to do my research, look for an investment thesis, but there are a lot of red flags going on with this company, especially for a utility, which is supposed to be a safe kind of business to own. Alright, so those are the two companies in my portfolio right now that I'm kind of have dilemmas over, that kind of have the question mark on their future for the portfolio. Don't know if they're companies that I could easily buy and add more to, or I could sell out of easily. Their current dilemmas going on in my head right now, guys. Once again, this is all an effort to promote transparency amongst the finance community. During a time like this, it is very easy to get discouraged and think that a lot of companies in your portfolio are bad quality stocks. And while they may actually be true for some, you gotta stay focused, stay patient, be happy when the market goes down so you can buy your companies at even better prices. I really greatly appreciate it if you made it to this part of the video. Thank you for watching. Let me know some stocks that you have in your portfolio right now that you're kind of questionable on. And of course, thank you, and do dividend stocks, not drugs. Have a good one.